All right, hello everyone, and welcome to everything you need to know about managing 1099s and W-9s. My name is Mimi, and I'll be your host for today's webinar. Today, we will be covering inefficiencies and liabilities associated with these forms, workflows to follow when dealing with W-9s and 1099s, challenges linked to managing W-9s and 1099s, technological investments to help streamline your W-9 and 1099 processes, and that's about it. Before we dive in, I just want to cover off a little housekeeping information. So a friendly reminder that Avalara cannot provide legal tax advice, but we will answer any of your questions as best we can. On your screen is our safe harbor policy. Please take a moment to review while I continue with some additional housekeeping. We are recording today's event, so if you want to listen to it again or share it with a colleague, you'll receive the recording within the next 24 hours. The console you're looking at can be customized, so feel free to move around and resize the windows if you'd like. Slides can be resized by dragging the bottom corner or by downloading the PDF slide deck under Additional Resources. Additional Resources section also contains related resources. If there are any you'd like to check out, go ahead and click on them now, as the console will automatically close at the end of the webinar. If you have any questions, please submit them to the Ask a Question box. We will answer as many questions as possible throughout the webcast and during the Q&A time at the end of the presentation. You may also submit webinar troubleshooting questions there. Join the group chat now by clicking the button down at the bottom of your screen with the little chat bubbles. The group chat will pop up on your screen. We encourage you all to introduce yourself and make connections with your fellow Avalara customers. Drop in the chat where you're calling from now if you'd like. And if you have any technical issues, there's a question mark icon at the box, or reach out to us using the Ask a Question box. We are offering 1 CPE credit for today's presentation. For those looking to receive CPE credit today, please note that we will ask you to respond to up to 3 of our 4 poll questions. The poll question will pop up on your screen for a limited amount of time, so please make sure that you're ready to answer when the question appears. Please do not split the tile screens on your computer, as this can affect the placement of the poll question. You must also attend the full 60-minute duration of the webinar in order to qualify. Once you have met the CPE requirements, your certificate will be able to download in the Earn Certification box on your screen. Click the icon to access. It will open up a new tab. Your certificate will also be sent in a post-event email. Unfortunately, we are unable to provide CPE credit to those who have technology issues that prevent them from qualifying. If you have a moment, please respond to the survey questions on your screen during the webinar. All right, so let's meet today's presenters. Today, we are joined by Tim Garton, Director of Business Operations at Avalara for Avalara 1099. Tim, can you please introduce yourself?
Hey guys, thanks Mimi. Yeah, I just wanted to say thanks everybody for tuning in here. Once again, as Mimi said, I'm Tim Garton. I help manage the 1099 and W-9 solution at Avalara. And I've kind of been in this space here for a little over a decade. Originally wasn't part of Avalara. I was originally helped start a company that did 1099 filing. I think this was back in about 2010. That was a much smaller company, and that company was called Track 1099, and we were acquired by Avalara about 3 years ago. And it's been really exciting to see sort of Avalara's enthusiasm to grow this product and build a better filing solution. So that's been great. I don't know, on a more personal note, when I'm not reading up on the latest 1099 filing changes, I enjoy the outdoors quite a bit, hiking, camping, running, and I'm also a bit of a board game geek. My wife and I play a lot of board games. We've recently been playing Jaipur and Splendor, if anybody else out there is a board game geek. That's it for me. Thanks.
Thanks, Tim. We're also joined by Alan Ruttenberg, Senior Manager the marketing department over here for business licenses in Avalara 1099. Alan, do you mind introducing yourself?
Hi, everybody. Thank you, Mimi. Hi, Tim. Hope you're doing well. I'm doing great. Yeah, I guess what I want people to know is that I am a true subject matter expert, but unfortunately in the wrong subject. Now, don't worry. You don't have to go anywhere. You're in the right place. The way we're going to be doing this webinar, the format is going to be that Tim, the true subject matter expert on W-9s and 1099s, is going to be educating all of us, including me. I'm going to try my best to channel the questions that the audience has for Tim. I'm ask him to clarify things and perhaps try to stump him a few times along the way. But that's how we're going to handle this. My background is in business license compliance, and I do that predominantly more than 1099 for Avalara. Personally, I'll just say that I'm a film lover and a very avid chess player. And that's all I'll say about myself.
Thanks, Alan. Okay. Well, I'm going to hand it over to you two.
Okay, great. So I guess I'll walk you through the agenda. We're going to be covering W-9 forms and 1099 forms, just going through the basic definitions, making sure we're all on the same page. We're going to talk about a lot of the challenges that are associated with them, a lot of things that surprised me, a lot of things that Tim has already brought me up to speed on, we're going to be covering here. We'll go through some of the horror stories, some of the penalties, some of the ways you can get into trouble if you're not doing it correctly. We'll talk about some of the best practices, and we'll be at the end introducing our own solution. And then we'll be answering any of your questions. I think this should be a great, engaging webinar. You ready to go, Tim?
Yep, let's do it.
Yeah, so what are these W-9 forms and these 1099 forms? I mean, I know personally, I've been a contractor for companies, and I know that they sent me requests in order to, sign W-9 forms. So I definitely know that every company files them. Anyone who hires vendors, contractors, and freelancers, they have income that needs to be reported to the IRS. Does that pretty much cover it? Vendors, contractors, and freelancers, or is there anything else, anything that's missing in that list?
Yeah, sure. So yeah, those are kind of the most common ones, but actually there are, last time I checked, I think there are 30 various types of 1099 forms out there. And so really the 1099 form is used to report sort of what's considered non-employee income to the IRS, right? And so non-employee income it basically is any type of income that's not the typical salaried employee income. So most of us are familiar at the end of the year, we get if we're a salaried employee, we're at a set rate. We're not at an hourly rate. And we get a W-2 from our company at the end of the year that we use to file taxes. That sort of income is considered employee income. But 1099 income is basically everything else. And so, the case where it's a contractor or a freelancer, that's where they're not an actual salaried employee of the company. That's one example. But there are various other examples that we can dig into a little bit that sort of qualify as non-employee income.
Okay, terrific. And I want to bring us to this slide because there is just a quick point that I think we want to make, because I think what the audience is going to hear us doing quite a few times is just referring to 1099s or referring to W-9s. And probably quite a few of them are going to say, well, wait a minute, what about the 1042S? What about the 1099K? What about this version, that version? So I just want to be clear that there are dozens and dozens of forms, which, personally, we support all of them in our solution. But the 1099 and the W-9 are what dominate the field. So for the sake of simplicity, you're often going to hear us referring to 1099s or W-9s, and it's a shorthand for all the various IRS forms that have to do with these non-employee income or even employee income. As a matter of fact, Tim, if you could just give us like a very quick tour of the world of the 1099 and W-9. We'll go into more details on those two in a minute, but there's everything else. There's the K, the DIV, the INT, and so on. Just walk us through it real quick.
Sure. Yeah. So you can see kind of here on the screen, we have the whole list of well, it's actually, this isn't even the comprehensive list, but this is a list of many of the various 1099 forms. I wanted to maybe just touch briefly on some of the more common ones. So the 1099 NEC is sort of the most common one, and the NEC stands for non-employee compensation. And that is the sort of situation that we mentioned at the beginning of this webinar where, say your company hires a a contractor or a freelance writer to do something and pays them a few $1,000s over the course of the year. That's how you would report that income. That's the 1099 NEC. But then some of the other ones, more common ones, the 1099 miscellaneous. This one sort of is just kind of a catch-all to some degree. It covers various other miscellaneous income. Some of the more common ones might be if you're a property owner and you have a property management company that manages the property that you own. They may report the income that property brings in on a 1099 miscellaneous, and there are a couple other categories that go into that. The 1099 int. This was one that a lot of people might be familiar with because they might receive this form in January, and this might be coming from their bank reporting interest income on their savings account, their bank savings account. So the 1099 int reports interest income, and once again, that's income that the IRS cares about, wants to know about, wants to be able to tax people on. So that's that. The 1099 div reports 1099 dividend income. So that's another example. And then the last one that I wanted to sort of touch on briefly is the 1099K. And so this one has actually come up in the news a fair amount in the last couple of years. I'm guessing that a lot of you may have heard about this, where actually at the end of last year, there was a little bit of a around this where PayPal and Venmo were kind of pushing back and not wanting the IRS to require a 1099K to be filed, and the IRS was wanting it to be filed. So the 1099K is sort of interesting. Historically, it's used to report income collected by credit card processing companies. So if you have a point of sale system at a restaurant, for example, the company that sort of manages the credit card processing, manages that point of sale system for you, at the end of the year will issue your company a 1099K that reports all of the income that was taken in through credit card payments for the year. So that's the sort of traditional usage of the 1099K, but the reason that it's coming up in the news recently is that it also qualifies for online marketplaces, because marketplaces like, for example, eBay or Etsy, they also collect payments from the people, the buyers, and then distribute those payments to the sellers on their platform. And so that's a situation where if a seller on eBay or Etsy brings in more than a certain amount of income via that platform, then eBay or Etsy or whatever the online marketplace will actually need to issue a 1099K to the sellers. And it's also, if you're collecting payments via Venmo or PayPal, it falls into the same category. And so that's why it's kind of been in the news recently. Then wanted to just also touch briefly on the 1042S. People may have heard about this one a little bit, but not sure what it is. That's basically the equivalent of a 1099, but it's if the recipient of the income is a foreign individual or foreign entity. So if for whatever reason your company has hired foreign contractors, then they would be issued a 1042S instead of a 1099. And then the last little bit are the sort of three in the bottom right row there, the W-9, the W-8, and the W-4, and we'll maybe touch on this a little bit more in the next slide here. But these are forms that you actually collect when you first start a relationship with a vendor or a contractor, in anticipation of paying them and in anticipation of issuing them a 1099 or one of these other forms at the end of the year.
Okay, terrific. If anybody has questions about any specific form, feel free to ask them. We'll try to answer them the best we can. But as we said, we're using these two as shorthand to describe everything, and that's the IRS form W-9 and the IRS form 1099. I'm not sure we need to focus too hard on these definitions. They're on the screen, people can read them, but the basic idea is kind of covered in the very next slide, where we're going to talk about workflow and how you end up getting caught in the middle. And the way we see it is, and I apologize, does it appear to you that some of these icons are missing from the screen?
Yeah, I'm not seeing them, Alan.
Yeah, my apologies to the audience. Something went wrong with the presentation. Forgive us for that. But the basic idea is the contractor should be right here on the left, you in the middle, and the IRS is on the right. The basic idea is the contractor gives you a W-9 upon your request. Then you file a 1099 to the IRS using the info that you get from that W-9, and I assume, Tim, that means predominantly Social Security numbers or TIN numbers.
Yep.
Then
Social Security number, legal name, address. Yep.
Okay, great. And then you're going to send a copy of the 1099 back to the contractor so that they can file their own taxes. And then meanwhile, again, this would be the IRS here on the right. The IRS would send you an audit request. Hopefully not, but occasionally they will send you. They will try to audit you, and if that's the case, you better have your original W-9s on file. And we'll talk more about the storage of those W-9s later on. But the basic idea is that you're going to get caught in the middle between these inefficiencies on one hand and liabilities on the other. So going back and forth with your vendors and contractors can be an extremely inefficient process. And having to deal with the IRS, if you make mistakes, then you end up with liabilities there. So that's you caught in the middle between those two things. Now, let me ask you a question, Tim, because I know that this came up in some internal conversations just the other day. And I want to ask it now because I'll forget to ask it later. Someone told me that this contractor gives you a W-9 upon your request is not the only time that it's considered best to request one. In fact, that some companies consider it a best practice to request a fresh W-9 from their contractors every year. I had actually never heard that before. And I don't know how common that is. What do you think about that idea?
Right. Yeah, that's a good question, Alan. And it is kind of a funny. I mean, it's a little bit. It's not really a gray area, but it's definitely an area that we do see companies sort of taking a little bit of a shortcut a lot of the time. A lot of times companies will. They collect a W-9 from the contractor in 1 year, and then they just sort of keep that one on file going forward and don't bother with collecting an updated one every year. Really, that's the best practice. Is the advice is what the IRS wants you to do is to collect a W-9 every year from all of the vendors, contractors, people, entities that you're doing business with, that you're paying non-employee compensation to. But we do see, companies, a lot of times what a company might do is they might say, they might reach out to the contractor the next year and say, hey, has anything changed? And if so, we'll collect an updated W-9. But if nothing's changed, we're just going to leave things as is. And, if you have 100% correct information for that contractor on file from that original W-9, you'll probably be fine, because the IRS, nothing's changed from the IRS perspective. The IRS isn't going to reach out to you saying, hey, you've got an incorrect name or tax ID for this contractor. But if the IRS ever does, sort of audit you or come back at you and say, hey, it looks like, this contractor's, name has changed, it doesn't match our records. The only way that you can avoid penalties is if you actually have a W-9 for that contractor from the year that the income was paid. So it really is considered a best practice to collect updated W-9s from all of these vendors and contractors every year.
Okay, thank you. Well, that's very interesting. And by the way, I can see in the chat that a lot of people are writing to say that they can see the icons. I don't know why Tim and I can't. Something's strange about the system we have. It's okay. It looks like it worked for everybody. Okay, and I guess we go into a poll question now. So Mimi, is this what you handle?
Yep. So first poll question, how would you rate your current W-9 and 1099 compliance processes? A, great, B, good, C, average, D, poor, or E, terrible? Please submit your answers now. Perfect. Give you another 10 seconds. Excellent. Okay, let's see the results. Between good and average. Okay, let's keep going.
You surprised by anything, Tim? Must be kind of average.
Yeah, I'm actually a little surprised that there aren't more sort of. I would expect to see it a little bit more weighted towards the sort of poor to average scenario, just because most people that we talk to really sort of dread the whole 1099 filing process that comes in January. It's a big sort of time sink, a lot of manual effort that they really don't look forward to. So, but it's great to see that a lot of our audience are feeling pretty good about it.
Yeah. I wonder what would happen if we actually asked the question in middle of January.
On January 30th. Yeah, maybe it'd be a little different then.
No, okay, great.
Right, back over to you guys.
Okay, and speaking of January 31st, so we put up this slide that the deadline for IRS filing is the end of January, but it actually is, as I understand, as you explained to me the other day, Tim, a little more complicated than that. So there are a few dates to keep in mind. So can you just walk us through how this calendar works?
Sure. Yeah. So there are a number of deadlines at play here, right? And so the January 31st deadline that we sort of discuss here, that really, and this depends on the form type, that really applies to the 1099 NEC, that form that we talked about a little bit earlier. That's kind of the most common one that businesses deal with, and that. The 1099 NEC must be filed with the IRS by January 31st and must be provided to the recipients of the form also by January 31st. However, the rest of the 1099 forms, the deadline for them to be filed with the IRS is typically at the end of March, so March 31st. Those other 1099s, though, the deadline to deliver to the recipients still is January 31st. So all 1099s have to be sent to the recipients by January 31st, but some of the 1099s have to be filed with the IRS by January 31st. Some have to be filed at the end of March. And it's also a little bit more complex as well. The delivery to the recipients, you can perform an electronic delivery to the recipients, and there are some specifications about how that's done, but recipients also can request a paper copy. And so if you're going to deliver a paper copy to the recipients, that via the postal mail, it has to be postmarked by the end of the day on January 31st in order to meet that deadline.
Okay, great. So delivery to recipients and postmark to the recipients are not the same thing. That's a distinction.
Well, yeah, I mean, you can deliver to the recipients two ways. You can do an electronic delivery, and that one just has to be whatever mechanism you choose. Most filing platforms may have an electronic delivery option to send to the recipients. Maybe it's via email or some other way, but that one has to be done by the end of the day on January 31st. But if a recipient wants it via postal mail, then it has to be postmarked to the recipient by the end of the day.
Okay, got it. If anyone has any questions about any of that, they should ask in the chat. And let's get into this IRS requirements and how they are moving targets, because this is kind of interesting, and it created a little scramble for us at the last minute here. The federal and state regulations for compliance are constantly changing and being rewritten. So an example of this is something that Tim actually mentioned earlier, which is the 1099K. The IRS changed their threshold. And what was it before? It's down to $600 from what?
Right. So originally it had been $20,000. So going back to that situation, that example that I talked about where, say you're selling things on eBay, right? Well, you would only receive a 1099K if you took in more than $20,000 via everything that you sold on eBay in a calendar year. But the IRS, last year had passed some legislation to drop that threshold from $20,000 down to $600, which is, a huge change, obviously. And so it resulted in eBay was going to have to, all these online marketplaces were kind of in a scramble because they were going to have to now file a whole ton more 1099Ks and provide copies of those 1099Ks to all of their sellers. And at the same time, all of these sellers now are having this income report of the IRS and potentially going to have to pay taxes on this income, on the income that they brought in by selling via one of these online platforms, online marketplaces.
So down to 600, but then it's only changed really last week, and we had to revise this presentation at the last. You called me up in a hurry and said, "Wait, it's no longer applicable." So what happened? Right. They just delayed it until next year.
Right. Yeah. So the IRS just announced, I think it was last Wednesday, actually, that they sort of delayed it until next year. And so this year, the threshold is going to stand at $20,000 still. Next year, I think that the new threshold that they're looking at is $5,000. So it's not going to go all the way down to that 600. But, as we've seen, we'll see where things land, at this time next year, because, things may change again. So we'll it's as we're talking about here, the IRS is constantly making changes to the requirements for filing.
Yeah. Now, it's worth noting not all of our attendees are going to be worrying about 1099-Ks at all, because they may not be in that kind of industry, but it's a perfect demonstration of exactly what the title of this slide is, which is IRS requirements are moving targets. So things can be changing, and can be changing right up until the last minute, in this case, towards the end of November. So doing your due diligence is incredibly important. And that's something that's getting drilled into my head at this very moment. And then meanwhile, looking at some other legislative changes. So we pretty much just talked about what happens here on the left. If there's anything more you want to add to that, Tim, that's great. But otherwise, there's another change that's happening this year, and this one has not been reversed. The idea of an electronic filing threshold dropping down to 10 forms. So can you walk us through that, please?
Yeah, sure. So, historically, and way back in the day, the only way to file these forms with the IRS was to print out copies on the official forms, stuff them into envelopes, and mail them into the IRS. Then, a decade and a half ago, the IRS sort of developed an electronic filing system to give that an option, so you don't have to do that. And then over time, it has sort of shifted a little bit, and the IRS is definitely preferring that people, companies file to their 1099s electronically. But up until this year, up until the current filings last year, current filing season, the threshold was that you could still file via postal mail and paper if your company was filing less than 250 total 1099s, right? Now, starting next year, starting January 1st, just here in another 5 weeks or whatever it is, 4.5 weeks, that threshold is actually dropping down to 10 forms. So any company that is filing more than 10 1099s next year will have to file them electronically. And so this is kind of a big change, right? Because 250 down to 10, there's a lot of small business. A lot of businesses may be filing, 10, 20, 30 forms, and it's easiest, they've just been doing it by printing it out on paper and mailing it in. Well, this year, they're going to have to file electronically. And, filing electronically completely on your own without using some sort of a platform or some sort of software to help you do that is a lot of work. And so most of these companies that fall into this category are going to sort of be scrambling or looking to use some sort of solution that can help them with that filing process.
It's interesting. At Avalara, we often talk about automation and doing things electronically as an option, a better option than what you're usually doing here. But in this instance, we're actually talking about it as something that's mandatory, coming directly from the IRS. More companies are going to be required to do it electronically, whether they think it's more efficient that way or not, is what I'm hearing.
Yes, that's correct.
Okay. And then meanwhile, penalties, I'm told, are going up. And what can you tell us about that?
Sure, yeah. So starting next year, the IRS is increasing penalties, and kind of the way that the penalties work with 1099s is it's there's a penalty per form that's filed with either missing or incorrect data on it, and the penalty sort of varies based on how long it takes for your company to get the missing or incorrect data corrected to the IRS. It starts out at, I think, $60 if you get the correct information to them within 30 days, and then it jumps up from there. But basically, the IRS is increasing those penalties this year by some amount, and so that's something else to keep in mind.
Okay, excellent. Risks associated with them providing an incorrect tax ID for vendors when filing a 1099, and there's risk associated with the W-9 never having been collected in the first place. And that would be a risk even if somehow you do have the vendor's incorrect information. But if you haven't actually collected a W-9, then it becomes an issue, like a formal W-9?
No, it only becomes an issue if the IRS sort of reaches out to you and is claiming that you've filed incorrect information and that they're going to issue penalties. So then it's at that point, you don't need, so, it's to be clear for everyone on the call, a W-9 is not something that's filed with the IRS. The W-9 is just a form that's collected from that contractor by the company that's going to pay that contractor. And they collect that W-9 to ensure that they have accurate information for that contractor or that recipient of the income. And by accurate information, the most important information, of course, is just the legal name and the tax ID, whether it's a social security number or EIN. But then that's not filed with the IRS. That just needs to be kept on hand and kept on hand for, 4 years, and which is the time window that the IRS is interested in it. And what happens is if the IRS looks at what company has filed, the 1099s they filed, and they determine, oh, it looks like some of these filings have incorrect information. At that point, they'll reach out to the company and they'll sort of issue this CP 2100 notice and B notices, which I think we're going to talk about a little bit more in this further along in this webinar. That's when the penalties come in play, and you avoid the penalties by being able to provide a W-9 that you have on hand that you already collected from that contractor. So you can show to the IRS, hey, look, this is what the contractor told me. This is what I filed. So I've sort of fulfilled my obligation from that sense. And at that point, then it's the IRS may go after the contractor if they think that the contractor provided inaccurate information. But at that point, you're off the hook for those penalties.
Okay, got it. Now, the last box here is about security, but actually, it's definitely something I want to talk about, but actually, security comes up on a future slide, so let's skip it for now, and we're definitely going to talk about that later. But let's just get into this, that the various kind of vendors that you have responsibilities to, and very quickly, what is it you can tell us just about the responsibilities you have to the recipients of the 1099s, not the IRS, the recipients?
Right. So as mentioned earlier, you have to provide a copy of the 1099 to these recipients, and you can provide an electronic copy to the recipients. But it's important to note here, one thing that people may not realize about providing electronic copies to recipients is you also have to have the option for a recipient that does not consent to electronic delivery. If a recipient says, hey, I don't want to receive the copy of this 1099 electronically. I want a paper copy. If they request that, you have to provide a paper copy to those recipients. So that's something that people may not realize. And then it's just, it's these recipients. These are tax forms for these recipients, and they need them to file their taxes. And so you want to make sure that you have a system in place that you're doing this in a way that is going to get this information to these recipients in a timely manner, so that they can file their taxes.
I just want to quickly underline the point you're making about e-filing, that you can't actually, not e-filing, excuse me, e-delivery to recipients. That's different. E-filing to the IRS, e-delivery to the recipients. You can't do the e-delivery to the recipients unless they consent to receive an e-copy of the 1099.
Right. Yes.
Okay. We'll get into our solution later, because it was interesting to me to see how Avalara not got around that, but how Avalara complied with that rule. But it's right. An actual really important thing that can trip people up if you're just get into December and decide, well, I'm going to do it this way. I'm going to do an e-delivery. Well, you may not actually be set up correctly in order to do that e-delivery.
Right.
You may not have the signature on the paper yet. Right.
And it's important too that you also have to provide a way for a recipient to withdraw their consent. If they originally gave you consent, yes, I'm fine, you can deliver it to me electronically, and then a month later they come back and they're like, actually, I changed my mind, I want to receive a paper copy. You have to provide a way for them to to opt out of that electronic delivery as well.
That's really interesting. Sort of like the unsubscribe link at the bottom of emails. They have to be able to withdraw that consent at any time. I didn't know that. That's fascinating. And it's really important because people can make this mistake very easily if they don't know what they're doing. Okay, so very quickly, I just assumed that when it comes to the mistakes that people are likely to make on a 1099, that the Social Security number was the big one. And it might be the big one, but there are others that trip people up as well.
Sure, yeah. So, having a correct tax ID, of course, is the most important, but it's equally important actually is having the legal name correct as well. And this may not seem like a big deal, but if you think about it, if somebody gets married, they may change their last name. Sometimes businesses may make, sort of change the type of entity that they are, and then things may change. So making sure that you have those correct is the most important thing. And that's how the IRS identifies, within their systems who the recipient of that income is. But then you can see here too, there's some other fields that people don't think about as often. State ID, of course, is important. A lot of states these days now are also requiring filing of the 1099s because they want to, states have their own income tax that they want to collect. And so they want to know about this income as well. And so being able to make sure that you provide your company's state identifier is something else that people may not think about, that it's important to have on there.
Yeah, and I want to point out something, which is that, lest anyone think that the danger we're talking about here is that you get the wrong TIN number from the vendor or you get the wrong legal name from them or something like that. I just want to make sure people are reading this subhead over here in the top left, that when you copy and paste, you're prone to error. You might actually get the right information from people in the W-9, but if your workflow is not set up correctly, then you might be making a mistake when you're filing the 1099 regardless. Just simply in the human act of copying and pasting or typing it in, you might make a mistake, you might spell something wrong. So you have to be very careful about that piece of the workflow. It's getting from the W-9 to the 1099. I didn't realize the extent to which that was a significant source of errors. And then meanwhile, we haven't talked about states yet. So you have to worry about the IRS. And in fact, thinking back to the slide we had near the beginning where I had the diagram, we didn't have states in that diagram, but it's actually a piece of the equation as well. So let's talk about this. How many states actually require you to file as well?
Yeah, it's a little over half at this point, I believe. And interestingly enough, I feel like staying on top of the state's filing requirements can be a bigger hassle than staying on top of the IRS filing requirements, because the states, they have their own websites, Department of Revenue websites, that sometimes are up to date and sometimes aren't, and sometimes you have to call somebody to actually get answers and so on and so forth. So you can kind of see here's a few examples of some of the states that have filing requirements that it's sort of hard to track down. California, they require this 3921, 3922 to be filed directly with them, even if the filing, there's this other program called the Combined Federal State Filing Program, where the IRS will forward some of this information along to the states. But the California in this situation says, well, even if you participate in that program and we get it, we want you to file this form directly. Oklahoma is another one here where it's the same sort of thing, but it's for the 1099 NEC. And then South Carolina is kind of one of my favorite states here, where if any state income tax is withheld from from that 1099 income, then the 1099s actually have to be burned to a CD in this sort of antiquated file format that the IRS uses, and you actually have to mail that CD-ROM into the South Carolina Department of Revenue. So you can see that the filing requirements at the state level can be a little bit of a mess and hard to keep up with.
Yeah, Mimi, we should have a poll question. Who here thinks that Tim is making up this South Carolina example? Okay, but let's go to the real poll question.
All right, here's our second CPE poll question of the webinar. What is your company's most common reason for missing an IRS deadline? Is it A, changing legislative requirements or regulations, B, vendor complications, C, form errors, or D, we have never missed an IRS deadline? Give you all some time to respond. Okay. Just a couple more moments here. Get your answers in. Great. All right, let's see the answers. Looks like most have not missed one, which is good news, I think.
Yeah, I was rooting for we have not missed an IRS deadline. we never root for people to have problems. So that's good. Happy to hear that. But some people are having problems. And if they do have problems, then if I'm reading this correctly, Mimi, the most likely reason is hassling with the vendors. Mm-hmm. Right? That's how I'm seeing it.
And this is what, this has been my experience as well, is that, if you don't have a good sort of process in place to collect a W-9 when you start a relationship with a vendor, what ends up happening is then January hits and you realize, we paid this vendor, but we don't have a EIN for the vendor. We have to scramble to try to get that information, and maybe the vendor isn't all that responsive at this point because you're no longer paying them or whatever. And so, that's where a lot of people get frustrated.
All right, that's terrific. That's really good advice. And okay, so let's just go into the horror stories of dealing with 1099s. And we're actually running a little low on time, so we're going to kind of skip around. There's a lot of text on this page anyway. The main thing I wanted to do on this slide is actually talk about the bottom half of it, because I mentioned security and we skipped over it before. But let's just really underline this because it's important. If you're dealing with 1099s, you're dealing with Social Security numbers. And if you're dealing with Social Security numbers, you have a very big headache on your hands if you ever get hacked, ever have a data breach or anything like that. We mentioned Equifax, but they're not the only ones that have ever run into problems here. So security is extremely important here. And I'm sure everyone understands you don't want these Social Security numbers on your laptop. Right? You don't want them in some unsecure form. Security is extremely important. So here at Avalara, we have this SOC 2 Type 1 certification. We're upgrading that to SOC 2 Type 2. Maybe, Tim, if you can just very quickly explain to us what this is, SOC 2 compliance. I know you deal with this. Like, what should people know about this, especially if they're going to be interviewing other vendors, et cetera, figuring out how they're going to file? They probably want to be conversant in this language, that they make sure this data is handled correctly.
Yeah, I mean, it's just important to sort of confirm that if you are considering various, filing solutions, that you will want to ask about sort of SOC 2 certification. And the SOC 2 certification is really just a process where you hire a third-party auditor company to come in and sort of review a bunch of your internal security processes, a bunch of internal kind of incident response processes, how disaster recovery scenarios, things like that. And they'll review that and then generate a report sort of describing any areas that might be lacking. And so this is something that is starting to become kind of standard in the industry to ensure that whatever filing solution is doing it in a secure and privacy conscious manner, and you're not going to end up leaking all of these Social Security numbers and identifying information about some of your contractors through some sort of mistaken security flaw.
Yeah, it's extremely important. Thank you. And I guess we're going to another poll question, Mimi.
Back for poll question number 3. What percent of your team's time is spent fixing errors or resolving vendor questions on W-9 or 1099 forms? Is it more than 30% of the time, 20 to 30% of the time, 10 to 20% of the time, or less than 10%? We await your answers. Again, hope that it's D. Just a few more moments here to respond. Great. All right, let's see those answers. Wow. Pretty good.
Very good. Now, I hope people understood that we were asking about this during the busy season. Now, if you're thinking that how much time am I spending in April worrying about 1099s, I'm sure it's less than 10%. But still, for some of you, there is a substantial amount of time that you're spending on this. If you have a lot of 1099s to file, it adds up. So we definitely understand, but we're glad that for many of you, it's less than 10%. That's good. Okay, let me get to the next screen. And again, we are running low on time. There isn't too much to say about this screen, so I think we'll just skip it. I do want to get to this, a timetable of compliance steps. And it is not a typo that we begin with Q2 and work towards Q1. That is deliberate. That is because the Q1 is the filing season, as we've already mentioned. But the point we're going to try to get across here is that W-9 and 1099 compliance is not just a seasonal thing. There is work that can be done throughout the entire year, starting with determining who is going to own the process, because sometimes we've found that no one is entirely sure who is supposed to be responsible for it, or whether it's accounts payable or accounting, or if it's human resources and so on. The things like the W-9 collection can fall under so many different buckets that no one is exactly sure, and then somebody ends up middle of January trying to file their 1099s and is trying to pick up the pieces where, you know, a lot could have been done better if they had been responsible for it all along. Try to find early what kind of e-filing platform you will use. Do your due diligence sometime in Q3. Check up on legislative updates by the end of December to the first week of January. I think we already illustrated that point by talking about the saga of the 1099K. Double check that every vendor has a W-9 file. Do that sometime in Q4. E-file before the January 31st deadlines. Get the e-delivery to the recipients handled by then, and so on. And I do have one question for you, Tim, here. Safely store forms according to IRS guidelines. Does the IRS have guidelines about how to store these forms?
The IRS doesn't have any sort of specifications or guidelines with how you store them. They really just require that you store them for 4 years after the filing.
Okay, so that's the rule, 4 years.
Yeah.
Okay. And what must a 1099 W-9 solution accomplish? We're actually going to be talking a little bit about this in a minute, what our solution accomplishes, but many of the things we've already discussed up until this point. Using a paperless process is extremely important, transferring data from year to year and so on. Take a visual snapshot of the screen, and if you have any questions, you can ask us. Let's go to what I think is the last poll question.
Correct. Yes. Last poll question. Here it is. What is the hardest part of managing tax compliance for your business? A, sales tax calculations. B, determining when or where to register. C, keeping up with changing tax laws. D, managing consumer use tax. E, filing and remitting returns. Or F, managing exemption certificates. Give you a few moments to respond. Okay. All right, let's see those answers. Unsurprisingly, it was keeping up with changing tax laws.
That is interesting. Wait, I'm just scrolling through this really quickly. The second one is the one that's near and dear to my heart because I'm a business license guy. So determining where to register for like sales tax is part of that. But it's interesting. Keeping up with changing tax laws is really by far the hardest part of managing compliance. That's great information for us. I'm really glad we asked this question. Okay, and then going on to the last topic for our presentation today is we finally talk a little bit about ourselves and our solution, which is called, well, guess what? Avalara 1099 and W-9. And what is it you want to try to get across, Tim, about the solution that we built here? I know you've been involved in this solution for a long time. It's like a decade. What is it people should know?
Yeah, I mean, I think that there's sort of a number of things that you want to look for when you're evaluating solutions, 1099 and W-9 filing solutions. And, to be clear, we're not the only one in this space. There are other ones out there. So, certainly, evaluate, do some research and evaluate them all. But, you really want to look at, ideally, you want a solution that sort of helps collect and manage W-9s. We haven't really talked about it much on this webinar, but you would want a solution that can do what's known as TIN matching in the industry. And so TIN matching is this sort of functionality where you can actually take the name and tax ID that a vendor provides on a W-9, and you can do a lookup against the IRS systems, and they'll look it up against their database and give you sort of a thumbs up or thumbs down of whether or not it matches something in their system. And so that's a great tool to ensure that when you're collecting this information from your vendors, that it's accurate, that the vendor didn't make a typo, that it's something hasn't changed. So ideally, a solution will have that. An easy way to kind of transition from those W-9s to the 1099s when you're looking to file. Multiple options for providing the copy to the recipients. An electronic delivery option as well as a postal mail option. And then we also haven't really touched on this, but ideally you would want a solution that makes it easy to do corrections when inevitably if you do any amount of filing, you're going to find at some point that a few months after the deadline, you may find out, due to maybe some payment happened right on the edge of the year, and it turns out that that contractor was paid a little bit more than what we originally filed, and so at that point you have to actually file a correction with the IRS, and so making sure that whatever solution you adopt makes it easy to do those corrections.
You're right, we hadn't talked about TIN matching. I want to make sure I understood exactly what you were saying. Now, I understand the importance of getting the right TIN number. I understand the value in having a system that will check the TIN numbers, but you brought it up in the context of collecting the W-9s rather than where I thought you were going to bring it up, which is in the context of filing. So I want to be clear, you can do it at both times, or when is it ideal to do that kind of TIN matching?
Well, it's really sort of ideal to do it. I mean, it's actually ideal to do it at both times, because it is possible that from the time when you collect this information from a vendor until the time that you filed, that may be 9 or 10 months, depending on when start a relationship with a vendor. So it's ideal to do it at both times. But the way that the Avalara 1099 solution works is as the vendor, when you request a W-9 from a vendor, the vendor's filling out a form online and filling out basically the boxes that you would see on a standard W-9 form. And when they click submit, our system will then check with the IRS and do a lookup against that database to see if the name and tax ID that the vendor provided match. And if it doesn't match, at that point, we stop and we say, hey, what the data that you entered doesn't match. Please go back and check it and make sure that you entered accurate data. And then we also, our system also then offers the option in January, when you go to file the 1099s, you transition those W-9s over to 1099s and go to file, you can do another sort of batch TIN matching against all of that data just in case anything has changed. And so it'll do it a second time then.
Okay, terrific. And so ultimately you're looking for a solution for everything. You got to have something that's going to help you with your compliance with the IRS, also with the states. An Avalara solution does that as well. I don't remember if you mentioned that just now or not, but you can e-file your 1099s to all the states. And do you have to know which states you're filing to?
You actually do. I mean, at the end of the day, you would want to sort of confirm, but no, our system is smart enough that it can look and it this is based on criteria. Each state has its own set of criteria, but our system is smart enough that it'll sort of pop it up and say and call your attention to it. Oh, it looks like this form needs to be filed with the state of California. Would you like us to file it for you? So.
Okay, terrific. And then of course the e-delivery back to vendor or postal delivery back to vendors, if that's the direction you prefer to go. You need a solution for all three of those things, IRS, states, and vendors. I apologize if I was talking a little fast towards the end, but we wanted to leave time for questions, and I think we're basically out of time now, right? Mimi, do we have time for questions?
We do. Folks, if you don't mind, we're going to go a little bit over since we started a little bit late. So please stay on if you're available. We'll get to as many questions as we can in the next couple of minutes. So the first one I have for you, Alan and Tim, is it still true that if a vendor is an S Corp, that we do not need to do a 1099 NEC or a 1099 MISC?
That is true, actually. Yeah. So S and C corporations, you don't actually have to issue a 1099 to them. It's really primarily sole proprietors, partnerships, unincorporated contractors. You know, there are some subtleties there. I'm trying to remember. I believe that even if it is an incorporated company, if it's for lawyer fees, you still need to issue a 1099 in that case.
Okay.
But yes, not for an S Corp or C Corp.
Okay. Another question we have, do the states require 1099s only if the payer is in the state, or even if the payee is in the state, even though the payor is not?
Yeah, so this is sort of the can of worms that state filing is, unfortunately, and it's every state is actually can potentially be a little bit different. Most states, it's based on where the recipient of the income is, and it doesn't really matter where the company is. You know, so if a company's based in California and they pay a contractor, a freelance writer that's based in Pennsylvania, they may only need to file with the state of Pennsylvania. They may not need to file with California. However, that's not the case for all states. You know, I'm trying to think of the one that jumps to mind is Oregon. I think in Oregon, regardless of where the recipient is, if the company's based in Oregon, Oregon still wants that company to file those 1099s with the state of Oregon, even if the recipient happens to be outside of the state. So it kind of depends on the state, and unfortunately that's part of the challenge here, is that you have to, you know, potentially do a bunch of research in order to know for sure whether or not a 1099 needs to be filed with the state.
Got it. All right, another one for you. If a vendor has changed their identity, for example, bought out or changed form of business mid-year, aren't you required to issue 2 1099s, one to the first for the period of time they were part of that entity, and the second for the new one for the time that entity was who you transacted with?
Right. Yes, I believe that is correct. If payments were made to the entity in the first half of the year when it was a different entity, that represents income paid to an entity, and there needs to be a 1099 filed for that, and then there would be a separate one filed for the second half, which, you know, from the IRS perspective, it's two different entities that receive the income, and so they would expect to receive 2 1099s.
Got it. Okay, another question.
Maybe if I did want to, because I thought I saw a couple of questions here regarding that electronic filing requirement that we sort of talked about a little bit. And I think one of the questions that I saw was asking about if you have, you know, 5 1099 NEC forms you have to file and 6 1099 miscellaneous, does that cross the threshold? And I believe that it's the threshold of 10 is based on the form type. So it only applies if you have more than 10 of a specific form type. If you have 5 1099 NEC and 6 1099 miscellaneous, because they're separate form types, that doesn't qualify as going over the threshold. So you'd still be able to file those via postal mail and paper.
Good reference. Yep, I saw a bunch of questions on that as well. Another one for you from Doreen. Since the IRS offers the ability to TIN match with W-9 information, can I be penalized if I do not TIN match the W-9 information I receive from the vendor, which ends up being incorrect?
Yes, you absolutely can, and most likely will be penalized if you don't do TIN matching and you end up filing 1099s with inaccurate information from the vendor. Yes.
Okay. We had a couple questions on exemptions. So can you comment on exemptions to filing 1099 for vendors, et cetera, that are corporate entities?
I'm guessing that maybe that this is kind of referring back to that first question that you're talking about, where you don't actually need to issue a 1099 for if the entity being paid was an S or C corp. I think that's probably what people are referring to there.
Got it. It's asked and answered. Okay, another common question I've been seeing come through. What if you've done your best to get a W-9 from a vendor, but they don't reply no matter how many times you ask for one? How does the IRS view that?
You can hear the frustration in that person's question.
Yeah, you can.
Well, the unfortunate thing is that at the end of the day, it is your responsibility. So you will bear the burden if there's a penalty incurred in that situation. And that sort of brings back or ties back to the point that it's really important to get a good process in place to collect this information up front, right? Because a vendor is going to be much more amenable to providing this information if you tell them you're not going to get paid until you provide this information, right? At that point, the vendor's going to say, okay, I guess I better provide it. But if you wait until January and, maybe at this point you may not even be working with this vendor anymore, so the vendor at that point doesn't care. When you're at that point, if you're trying to get the vendor to provide this information, they may just ignore your calls and emails and say, I don't care. It doesn't matter to me anymore. I'm not working with this company anymore. So.
Yeah. Good answer. Another clarifying question. When does the new e-filing rule take place? Is it the 2023 tax year or the 2024 tax year?
So the reduction in the threshold from 250 down to 10 forms, I believe that's what they're talking about.
Yes.
That is applying for tax year 2023, and for clarification for everybody, tax year 2023. That means that forms filed starting on January 1st, 2024, that's, basically it's that season. So this coming January, this threshold will apply.
Okay. And one more question. How does Avalara get information to populate 1099s? Do they have to be manually entered, or is there a file upload option?
Yeah, great question. Yeah, so our solution has quite a few different ways that you can populate the 1090 information. If you're just doing a few, you can sort of just log in and manually type it into the website itself. We do offer file upload options, and we provide sort of spreadsheet templates, so you can download a template from our platform, so you can see exactly the columns that you need, and then you can, using your, some sort of report that you generate from your accounting system, populate that spreadsheet with all of the 1099 data, and then just upload it. And that, that can work for anywhere from, a dozen forms all the way up to 500,000 forms. You can do it that way. And then we also offer some additional sort of integrations with some of the more common accounting platforms out there, like QuickBooks Online and Xero and Bill.com. We have sort of direct integrations with those, where you can actually, our system can actually pull the 1099 information directly from those other accounting platforms.
Thanks, Tim.
Yep.
All right, everyone. So unfortunately, that's all the time we have for audience questions. Just one more slide to look at. To close out, if you're qualified for CPE credit, you can download your certificate now in the CPE certificate engagement tool. Your certificate will also be available in a post-event email that you'll receive within the next 24 hours. Also, in that post-event email, we'll include a link back to this console to view the on-demand recording. We'll also send out the slide deck and the additional resources. Thank you all again, and this concludes today's event. Have a great rest of your week.
Take care.
Take care.